All right, our first speaker in this second part of the session is Phil Baker. He is the Executive Advisor, Transactions, Strategy and Commercial at GHD.
Thank you very much for that, and I'd sincerely like to thank our marketing support team for putting my picture in from about 20 years ago rather than the current one. Anyway, thank you very much for that. I'd like to take the opportunity to just firstly acknowledge and provide respect for the people of the lands that we meet on here. I'm from Melbourne, but I'm advised that we're meeting on the Whadjuk people land of the Noongar Nation. And I've also learnt that Perth is regarded as a Boorloo. So acknowledgement to our traditional owners, their leaders, past, emerging, and present. My discussion today it's fairly straightforward. It's not a long discussion. I wanted to set the scene. I know we've had a lot of narrative today about the markets, but I'd like to encourage you to take a look at these two graphs here. And this presentation will be available on our website for you. This talks about our global transition of influences on different materials, the technologies, the development of fuel cells, electrolyzers and so on. I know this is a battery minerals conference, but I can't escape the fact that magnets and rare earth magnets and permanent magnets are extremely important. And if you examine the permanent magnet market, we see the same characteristics and we see the same challenges around certain nations that possess a dominance in that area that really needs to change to help large parts of the globe move forward with its decarbonisation. This is interesting. The first graph, if you look at the cumulative effects on that, one of the things there that's interesting, if you look at the grey and the blue and the purple columns on the right in those pairs across that first graph, that's where future energy is being exploited. That's where it's going. And if you look at the change, there's certainly a change in the dark blue and in the light blue, but the purple and grey changed significantly. The purple and grey, that's actually Asia and the rest of the world. So we talk about the growth of EVs in our first world societies and things like that, but there is significant demand on critical minerals to underpin these energy changes and these energy growths projected through to 2050. The other thing that's really important about that graph is if you look on the top left side on the vertical axis, it says 1200. That's $1.2 trillion of spend in 2050 on those technologies. Now, to put that into perspective, the global GDP, our entire planetary GDP today is 84 trillion. So this is 1.2 trillion. It is in 2050, but that is a significant number. Australia's GDP is about 1.6 trillion. So that alone is nearly equivalent in 2050 to the entire GDP of Australia. So it's a significant growth. We have seen a lot of discussion about growth today, but I think this provides an additional perspective. The other piece about this too is if you look at the second graph, then obviously the demographic around the change. You look at the orange, which is the orangey red bottom, which is the reduction in carbon fossil fuel-based products, oil. You look at coal shrinking away quite substantially. Natural gas still has a role, but it starts to dissolve out in the 2030 to 2050 period, probably closer to 2050. Now, before I go to my last slide, which is actually the third slide, I wanted to put something on the page here. This is a graph from the New York Stock Exchange. This looks at, actually it's an amalgam of some stock exchanges, sorry. This looks at the price of platinum for the last 6 months. And it looks at 5 companies. The one that drops significantly at the end there, which has 90% loss in value, is Russian platinum. What I'm trying to show here is not the volatility that you can see in the last month or two, or the drop in the Russian company's platinum production value. What I'm trying to point out here is the impact that this has on the planet in terms of sovereign risk. If you think about what other exposures that Australia really provides a benefit for, is Australia is a stable nation. We have stable characteristics about the way we go about our business. We've heard a lot of discussion today around the ethics we apply and how we mine, how we develop our resources. And this graph here certainly shows a 90% reduction in Russian platinum, and it certainly shows the last couple of months of volatility, but it also shows how we can consider the benefit that Australia brings around its sovereign stability. Now, if we acknowledge the benefit of the sovereign stability, we acknowledge that we are resource endowed, we build systems that support and maintain, and we take carriage of the fact that we have strong characteristics presenting stable ESG. We have the ability to prepare and take part in a secure supply chain, an ethical supply chain. I see the Critical Minerals Facilitation Office has, through some of the grant programs more recently, there's been some $3 million, I think, was put forth for an organisation to develop a blockchain for critical minerals. And there's also work at play at the moment about national certification schemes. All of those things really important, again, going to the strength about having a stronger sovereign resource development capability. But the next piece, I think, is really important. In the space I work in, I work on a daily basis about helping organisations exploit their growth, how to find capital, how to work on investments, how to understand and grow and develop contribution to their business in terms of their financial position, debt finance, equity, swaps, all sorts of things. And in that part of the business, finding money and having money, now that's improved substantially in recent times, and I've heard today some wonderful stories about offtake success, how organisations now that may have had a bit of a challenge around trying to get stable offtake agreements or convert intended agreements through to binding bids and so on. Well, that's improved substantially as the world is waking up to the challenge around developing critical minerals, and Australia's benefiting a lot from that. We still need to find cash. We still need money. Businesses still need to be able to develop and need to be able to access different finance mechanisms and and have a different story around how they raise some of their funds. And I wanted to take you through a little bit of a background here. As I said, this is my last slide. It's not meant to be complicated, but there's a very sophisticated program that the federal government supports that has a lot of wealth in it and a lot of ability for organisations developing critical minerals to be able to prosecute the benefit to the benefit of their business. And that comes through a number of mechanisms. There's a number of support processes, and I'll just walk through some of these shortly. The work that I do with GHD and the space we're in, we help our clients, our mining companies, identify sources, identify funding, navigate their way through what are the different funds available and what are the different mechanisms that apply, as well as traditional, debt finance, equity investment, high value individuals and cash and so on. But also reaching into the complex federal government support process and the grant opportunities that exist. We've got the Critical Minerals Facilitation Office, and look, I deal with these guys a bit, and they're fantastic. I really put a shout out to them. I know some of you listened to Andrew Hutchison this morning at the breakfast. There's a couple of Critical Minerals Office, Facilitation Office representatives here, Kieran and Brett, and they're great guys and very, very helpful. There is also the Critical Minerals Acceleration Initiative. There's $200 million set aside for that. There's a further $200 million underpinning the Critical Minerals Acceleration Initiative, which sits in regional funding. So there's $400 million that can be accessed there. There is Export Finance Australia, which has $2 billion that it can support programs with. Now these things are all things that take a little bit of understanding, a little bit of navigation. I wouldn't say they're complicated. I would just say that they are sophisticated, and accessing these funds and working through the mechanisms that can benefit the development of your critical minerals projects or supply chain is very, very, very helpful. The next two I've got there is NAIF and the CEFC, the North Australia Investment Fund, and the Clean Energy Finance Corporation. They have multiple funding. They're not specifically critical minerals focused, but they do provide the ability to get access to funding. Austrade through its business-to-business collaboration. We know here that there are, and I've got at the bottom there are some bilateral and multilateral agreements that have been negotiated through the Critical Minerals Facilitation Office in the last couple of years, arrangements with India, Japan, South Korea, United States, and I've got EU there. There's the US, and there's actually several EU countries, and we heard one of our speakers earlier this morning talk about that, and we even heard Minister Pitt talk a little bit about that as well. Austrade, very successful in helping navigate offtake agreements and arrangements, particularly those that can sit within the bilateral and multilateral agreements. We've then got the Modern Manufacturing Initiative, which sits under the Australian Government's 6 initiatives there. The Modern Manufacturing Initiative, they have $1.3 billion. We saw announcements about a week or so ago, $273 million, of which some of our speakers today, Michael, have been the benefit of, and there are additional opportunities there. The $273 million came out under what they call the collaboration round. There are also integration and transition rounds, which some of our delegates and some of our organisations participating in this conference have had the benefit from, and of which those rounds, those of you in the room and others of you here can also benefit from. And I encourage you to have a think about that. The grant access process can be a little bit demanding to navigate, and there are useful guidelines, but we can certainly work our way through that particularly as a smart set of organisations working together. And then we move into the research territory. There are 2 sort of research structures set up. There's actually a $4.5 million advanced research development fund for critical minerals that's been set aside, which the federal government supports. And all of this is in the vein of national support, underpinning our sovereign stability, benefiting our resource endowments, and of course, delivering all that in the framework that we have in Australia around strong supply chain, ESG, and ethics. And then the second research development one, and then I'll conclude my discussion, is around it's a virtual national critical minerals research and development fund. It's $50 million over 3 years, and that's for ANSTO and CSIRO and Geosciences Australia, to help them support you and support industry develop our critical minerals products and our critical minerals offering for moving to the globe. And coming back to a comment that I'd like to pick up on, and I wrote it down a few times on another piece of paper I had, around a comment one that somebody made this morning. We're going from minerals to manufacturing. And that's really wonderful. And the Australian government is also in the process of developing assessment of regional hubs that can be used for processing and refining materials, so that we're not digging dirt out the ground and sending it somewhere to buy it back. We're actually taking and value adding and value enhancing our products that Australia has, and the sort of discussions that I have with people around their investments and accessing finance. So thank you very kindly.